Hi friends, welcome back to my channel P2G, Plan to Grow, Persevere to Grow. And in this endeavor, as usual, I am coming back to you in my second season with more videos on banking knowledge. And in this video, we will discuss something about the Reserve Bank of India. As up to this point of time, we have discussed about the Indian financial system overview. Thereafter, the different type of banks and little bit more about other financial intermediaries. Now the most important element that is known as the regulator part, and that part we will discuss, and in that first we will discuss about the Reserve Bank of India. And as Reserve Bank of India is one of the regulating authority for banks. See, for other kind of activities which are happening in financial system, there is a possibility, or there is a need to have a different regulators, and therefore accordingly there are different regulators, and those regulators are NABARD, as I said to you, then National Housing Bank, then SEBI, then IRDA, then PFRDA. These are the different regulators or supervisors are there in the financial system. And in this video, we will confine our talk only about the Reserve Bank of India. Because remaining that other regulators we will try to understand in our next video. Let me give you a brief about Reserve Bank of India overview. That is, Reserve Bank of India got established in 1935. That is 1st April 1935 under an act called as Reserve Bank of India Act 1934. Means prior to that, Reserve Bank of India was not there in our country. So this function of Reserve Bank of India was handled by other bank. But when the British government found that the functioning is getting a overlap, commercial bank functioning and regulatory functioning, so it thought to separate it and establish a separate bank and for regulating the banking industry to act as a central bank of our country. So therefore Reserve Bank of India got established under Reserve Bank of India Act 1934, and it got started functioning from 1st April 1935. As on today, there are 19 regional offices of Reserve Bank of India across, and majority are available or situated in state capitals, and there are 9 sub offices. Now, why this Reserve Bank of India got established? So, number one, a most important function, that is managing monetary and credit system. Means what? The supply of money to the economic functions or absorption of money from the economy. That is an important function which Reserve Bank of India does. How it does, we will understand in a due course. And the credit system means giving loans by the bank. There must be some regulation, isn't it? That regulation part is provided by Reserve Bank of India. Number two, it also stabilizes. It stabilizes value of external value of our rupee. As you know, the rupee is a medium of exchange for our country. But in other country, rupee is not at all of any use. And in that case, naturally, when someone needs some goods from other country, foreign exchange is required. And that supply of foreign exchange and the selling of foreign exchange, when it happens, in the process, the value of our rupee, that is external value of our rupee, is likely to get affected, and that's what Reserve Bank of India does. Third thing is balance between demand and supply. Balance between demand and supply of the money. Then there are other functions are there. I'll carry on in the flow, and then you will have the overview of the entire Reserve Bank of India functions. So number one is the issue of currency notes. As you know, who issues currency notes in a country? Then here is a confusion, bank notes and currency notes. See, Indian currency is a rupee. Indian currency is a rupee, whereas 10 rupee is a 10 rupee note. Means 1 rupee is different and 10 rupees are different. 1 rupee is issued by Government of India, whereas any currency more than 1 rupee, that particular power is entrusted only to Reserve Bank of India. And therefore, in our country, only one bank, that is Reserve Bank of India, issues the bank notes, and Therefore, on all banknotes, signature of Governor Reserve Bank of India is available, whereas on 1 rupee note, the signature of Secretary Ministry of Finance is there. So therefore, the power to issue is vested with the government for rupee note, but the function is carried out by Reserve Bank of India itself. Even the 1 rupee note is also printed, controlled, circulated by Reserve Bank of India. Let me clarify you that 1 rupee is a currency, whereas any note more than 1 rupee is a note, and all coins, okay, 1 note coins and small coins is the power of central government. Then not only this, the power to issue, power to withdraw also is with Reserve Bank of India. Means at any point of time, any banknote can be withdrawn by the Reserve Bank of India. And this particular issue of notes, it won't happen just because there is a need for currency notes printing. There is always a need is assessed on the basis of requirement of currency in the country, because as you know that now the slowly people are moving for digital economy, e-money, and in that process currency notes may not be required in the economy, and as such Reserve Bank of India will also take a call not to print more cash, because that's what is the job of Reserve Bank of India, that how much cash is required, how much cash need to be printed. Okay, it is not just because Government of India wants Reserve Bank of India go on printing, because printing of currency notes has got a secondary equation called as inflation. Therefore, it is not that way taken call. And as per the section 22 of Reserve Bank of India Act, this powers to print the banknotes is with Reserve Bank of India, and for that minimum reserve requirement is specified, that is of rupees 200 crore, and that within which 115 crore must be as a gold. In addition to this, let me share with you this, not only printing, even distribution of these banknotes to the people is also the job of Reserve Bank of India, and that job is done by Reserve Bank of India through establishing currency chests. Currency chests are established by Reserve Bank of India, which are managed by the banks, private bank or public sector banks, but they are the property of Reserve Bank of India. I think this is what about the issue of currency notes. Now let us talk second function, that is it acts as a banker to the government. It acts as a banker to the government. Means for all sort of money requirement of the government, the Reserve Bank of India is a banker. It acts as a central agent of central and state government. It maintains government account. It accepts deposit of the government. It accepts the taxes. It makes payment on behalf of the government. It also enables government to raise the loans, that is the debts. It allows government to overdraft facility, that is a ways and means advance. Third important function is acts as a banking regulator. Not only regulator but also a supervisor. Means rules framed, rules watched. That job is done by the Reserve Bank of India. And first is under section 22 of Banking Regulation Act. Earlier you have seen issue of currency notes is 22 of Reserve Bank of India Act. So under this section 22 of Banking Regulation Act, the power is vested with Reserve Bank of India. What power? To issue the license. Without license, nobody can act as a banker. Nobody can act as a banker. Nobody can start a bank. And this issuance of guidelines is a power of Reserve Bank of India. Not only that, even how much capital required by a bank to initially start as well as to maintain the capital, that is capital requirement or CRAR guidelines, okay, capital adequacy ratio guidelines are being given by Reserve Bank of India. Even flow of credit, where to money be lent by the banks, that also is decided by Reserve Bank of India. Therefore, it is called as a priority sector lending. Carrying inspection of banks, that is visiting the banks and carrying inspection. On-site inspection means visit and do, are they functioning properly. This job is also done by the Reserve Bank of India. And it acts as a lender at the last resort. Means what? In case bank needs money, if nowhere the bank is able to get the money, it can go to Reserve Bank of India. Reserve Bank of India will provide the money. That's why it is called as a lender at the last resort. Then it acts as a custodian of cash reserve, and it also acts as a regulator for NBFCs. These are the three functions we did. Now the most important function, monetary and credit supply. As I told you, supply of money or making available credit, it all being managed by Reserve Bank of India through two important tools. Number one is a quantitative tools, number two is a qualitative tools. What is this quantitative tool? Quantitative tools are either the policy reserves or policy rates. So what are all the policy reserves? Policy reserves are cash reserve ratio. Number one is a cash reserve ratio. What is cash reserve ratio? A definite amount of cash which is required to be maintained by the banks with Reserve Bank of India. Means against what? Against their liabilities. What are all those liabilities? Those deposits which are taken from the public or any borrowings banks have made from outsider. Against that, a definite percentage they have to keep with Reserve Bank of India, and this particular power is vested with Reserve Bank of India under section 42 of Reserve Bank of India Act. And CRR, there is no minimum, no maximum. Means Reserve Bank of India can bring it down to nothing or make it 100%. So that's what, no ceiling. The next is SLR. That is, SLR stands for Statutory Liquidity Ratio. This statutory liquidity ratio is as per the prescriptions of section 24 of Banking Regulation Act. And as per this section 24 of Banking Regulation Act, this reserve is required to be maintained by the banks in the form of investments in specified securities. Investments in specified securities. Money need not be given to Reserve Bank of India. Money required to be kept in a specific securities which are stated by Reserve Bank of India, and this is what is described in section 24. Then next is the policy rates. What is the policy rates? Number one is the bank rate, and bank rate is as per section 49 of RBI Act. Okay, then next is the quantitative tool, that is known as open market operation. Open market operation is nothing but buying and selling of government securities in the financial market. Buying and selling of government securities in the financial market. And why it is being done by the Reserve Bank of India? When Reserve Bank of India feels that there is a lot of liquidity is there in the banking system which otherwise not required, not good for the economy, then it tries to suck the money available in the banking system, and at that time it floats the government securities so that money will be flowing to the Reserve Bank of India. When it wants money to be there in the banking system, then it starts buying the securities so that money will be made available to the banking system. Now, after understanding these three things, that is CRR, SLR and the bank rate, let's understand what is the CRR as on today. As on today, CRR is 3%. As on today, SLR is 18%. Okay, as on today, bank rate is 4.25%. What is this bank rate? The bank rate is a rate at which the Reserve Bank of India rediscounts the bills financed by the bank. So this is what is there, and bank rate is under section 49. And then most critical part, that is the repo, reverse repo and MSF. What is repo? Repurchase option. Repo and reverse repo and marginal standing facility. Let's understand only the rates because we have a separate session on money market. At that time we will understand in detail. As on today, repo rate is 4% and reverse repo rate is 3.25% and MSF rate is 4.25%. In addition to this, there are quantitative tools, and those are selective credit control, margin requirement and moral suasion. What is meant by selective credit control? Specifying a particular commodity should not be financed, or no loan will be available against that commodity. Such kind of restrictions when they are there, then that is known as selective credit control. Then a margin requirement. When a loan is granted by a bank to some trader or some kind of businesses, how much is the margin required against that security? So that's what specification that also is used as a qualitative tool by Reserve Bank of India to manage the flow of credit. And last but not least is guiding the banks what to do, what not to do. That is a moral suasion. Then there are umpteen number of other functions are there. Supervisory review, bank acting as a risk-based supervision, carrying the risk-based supervision, providing rating to the banks, managing foreign exchange rate stability, then collection and publication of data. All these things are also there, but I think for our purpose, what we have discussed about Reserve Bank of India is quite sufficient. In our next video, let us try to understand about other regulators, NABARD, NHB, SEBI, IRDA and PFRDA. Thank you so much for watching.